Alright, so yesterday I did a video on a natural gas update. Again, $2 natural gas was the bottom, and $3 price for natural gas was in sight. Let's just recap what I was seeing. We'll just go to the weekly chart. We can see a triple bottom. We can see buyers defending this $2 level. We can see last week price rose convincingly and closed above this resistance support area, and during that rise in price did form a daily bias level at 235. This is $3, which is my next target, eventually moving higher to the 350 where there are weekly sellers. So let's quickly go down to the daily chart so you can see that level a bit more. You can see a rally in price, two basing candles as it was battling this level of resistance, and then this huge move on Thursday of last week. Now I did anticipate a pullback, and it looks like we got the pullback today. Weather was the main reason, as the forecast is for milder weather for the next 2 weeks. But in that video I shot yesterday, there was an article that specified that between June and September will be the second highest energy generation using natural gas. But let's get into the news today. This article is coming from the Wall Street Journal, and it is titled "Natural Gas Prices Decline on Mild Weather." Natural gas prices are starting the week on the downside, shedding 3%. Weather patterns remain bearish as widespread heat still isn't expected until after the first week of June. It adds, however, that some price support for the commodity may come from lower than normal winds last week, which reduced wind power generation and bumped up power plants' usage of natural gas. Okay, so again, weather related as to why we are moving down, but also after a huge week of higher prices, pullback was inevitable. It's also hitting the 100-day moving average. So I'm actually going to dollar cost into UNG, which is the ETF that tracks natural gas. So if we just look at the options, and I'm not going to buy stocks, I'm going to utilize leverage and look at options. And what I'm going to look at is the leap options, which gives me enough time to be right. Let's look at the January 2024 just to see what the open interest is, also volatility. And as you can see for the calls, we are declining because of prices down 7%. And I'm looking at open interest. So as you can see, most of the volume in the January 2024 options that expires is in the $7 to $8 range. Okay, let's look at the January 2025. If I want to give myself more time, then I'm going to go out an additional year. Now the implied volatility is higher than we saw in the January 2024 expirations. But if you can see, let's see, okay, so this kind of tracks my eyes. This is the $14 and the $15 strike, but the volume here, open interest is 10,000, roughly averaging 10,000 contracts open interest, which tells me that the smart money is expecting prices on UNG to get to at least $14, $15 in roughly 18 months. All right, so I'm going to start dollar cost averaging. Let's see, the spread. Spread is about the same. All right, so I am going to now start buying. Haven't decided yet, but definitely going to place an order today. Now, if we go to the UNG again, this is the natural gas futures chart. UNG should look very similar, and I've done some videos in the past on UNG, and you know, this is the, let's just zoom out to the weekly. This is a trajectory that I'm anticipating. I did anticipate making lower lows, which is good, right? We'd also see divergence, which is also good. Lower lows, equal lows on the RSI. And what do you know? My first target is $14, which coincides with where the smart money has placed their open interest at least on the January 2025 call options. So I'm going to, all right, let's drill down to the daily chart just so we can see a bit more. All right, where's that 200-day moving average? It is up here at $16. So the timing should work out. Let's see. Draw that straight line there. The timing should work out in the next at least 12 months, where the moving average kind of continues to drift down. Potentially, we can see price continue to move higher. First target is going to be that $10 area where there was the most recent pivot high. Let's see. Maybe something like this. So let's circle that. Let's see what happens. This is, no, I got to go further out. We got to go further out. This is 2024. 200-day. Let's see. All right. $12 in July. No. Let's see. All right. We're going to leave it as is. If we just project the 200-day moving average, that should line up nicely with the first target at $10. Maybe we get one of these patterns here. Let's see. Right, when price never moves up in a straight line or moves down in a straight line, it usually impulses corrects. All right, so let's put a little circle there. This is August, later this year. Let's see what happens. Let me know what you think about natural gas prices. Let me know if you are going to play natural gas through the ETF UNG. Thanks for watching. Subscribe. Please like the video.